Hi, I'm Steve Spencer from SMB Capital, a proprietary trading firm in New York City. In today's video, we are going to get a sneak peek at what we call our playbook trade review. This is a process that all of the traders on our desk learn. It allows them to internalize their A-plus trade setups, and by internalizing and learning the nuances of these trades, they can scale and trade them more aggressively over time. It's something that all of the top performers, all of the seven-figure traders on our desk have done over the years, and we want to give you a sneak peek and a look at how these traders became top performers. So if you're interested in becoming a top performing trader, stick around. Before we discuss this experienced trader's trade review from a recent trade, I wanted to remind you we have the 2-hour free workshop at tradingworkshop.com. 2 hours, link above. You'll learn our stock selection process and 3 high reward, low risk setups, including the exact setup that the experienced trader will be reviewing in this video today. Today we're going to do a playbook trade with an experienced trader whose name is Aaron. And Aaron, you've been trading for 5+ years, correct?
Yeah.
And you've gone through SMB training over the last few years. You've gone through various programs, or one program, or?
Oh yes, I've gone through all of the programs that SMB had to offer.
Okay, and so the playbook is something you've been doing for a couple of years now, right? The review process?
Yes. Yeah, since since I read the playbook in my early days, I created a playbook every single day, 5 days a week, and I continued to do that for about 3 years. And now I just consistently, if I'm working on a setup, I will do the exact same thing with that setup and create playbooks.
And so the reasoning behind why you were doing a playbook every day several years ago for a long period of time, what was your thought process there? What was the importance of doing a playbook every day?
When I'm trying to make a setup, an A-plus setup, I want to develop certain parameters and factors within a trade. And when I create playbooks for those, I'm able to list those points. And when a setup appears on the chart, it's just very easy to recognize.
And now have you found through that process of doing hundreds of these playbooks that's had a direct impact on your performance?
Most definitely.
Right. And it allowed you to scale your A-plus setups to much larger size?
Exactly.
Okay. And so Aaron's been trading for 5+ years. He's very humble, but he is a 7-figure trader. He went through the same process the top traders on our desk went through of making sure to memorialize his best setups and growing in those setups. And now he's an expert in his field, and incorporated those things from our training. He's a contributor to the desk in terms of sharing his ideas. In fact, you shared a chart, I think, for the trade we're going to review now. You shared this chart in real time, and then Bella reached out to you to do a review, right?
Exactly. Yep.
And so now I'm in this role going through with you today, and we'll see how that goes. So why don't you give us the setup and go through the process, and I'll ask some questions, maybe point out a couple of things, and we'll go from there.
All right, great. So this initially was a breakout trade above the opening range high and pre-market highs, which ended up developing into a big dog consolidation. And the stock that we're looking at today is in JMI. So fundamentals, I IPO'd on April 12th, and the day that I traded it was April 16th. It opened for trade at $18.95, and basically this is a pretty hot stock because it's the Amazon of Africa, and there's a lot of different funds starting to buy into Africa, and JMI is a good way for them to do that.
So it attracted your attention because of what you called the hotness of the IPO? Is that how it kind of caught your attention as a potential stock to trade?
Yes. I saw a lot of hype behind the stock.
And are there any things in particular, I know you talked about the technical aspects of it at the start in terms of above pre-market high and things like that, but are there anything in terms of it being an IPO that makes you treat it differently, or other factors to consider?
Yeah, with it being an IPO and there's really not like much data on it, my focus is a lot on the technicals, using the support and resistance from prior trading sessions to and certain technical patterns to develop my trade.
And this was like the third or fourth day in we're going to look at, or?
Yes, this is the third day.
Okay, and so he's trading a hot IPO. One thing we know about hot IPOs is there is not enough supply, there's a lot more demand, because when stocks come out and they issue an IPO, even if there's 50 million shares outstanding, they're only going to issue 5 million to the public. There's hundreds of hedge funds, there's thousands of retail traders trading momentum stocks. So when you add that all together, that can create very exaggerated moves because of the large supply-demand imbalance. And so Aaron also pointed out that he doesn't have much data because it's something new. And so he's going to have to really kind of zoom in on the technicals for that day. And you might have a few price points previously that will come into play. I guess we'll see as you walk us through that. So why don't you walk us through your process here?
So this is how I laid out my trade strategy. JMI was gapping higher this morning. On the open, I was looking for price to sell down to the pre-market support at 33.50 to 33.60, or the after-hours support at 33.25. If and when the price supports this level and buyers start to step up, I was going to get long a feeler for a breakout above the opening range high. If price breaks and holds above the opening range high and the pre-market highs, I'm going to add into this setup and continue to hold my position as long as JMI holds above VWAP and the support level. So there's a lot of good stuff there. Can you just go through, the first point was you identified prices where you would be interested to see it would hold these particular levels. Can you explain why that was part of your trade plan? Yes, so if we go to, say this 30-minute chart here, let's take JMI's first day in play. It closes at the high of day, strength continues on the second day, it's gapping higher, and you see it pulls back and it holds above the first day's range. And then taking a look at the close, it closes around 56% off the high, and then on the third day it's still gapping higher and it's holding above the after hour highs, and you could see some buying pressure in the pre-market around, what was this price? 33.65. So seeing these pre-market levels here, I thought if we could get a pullback into these levels, and I'm still seeing strong buying pressure on the tape, it would be a good idea to start putting together a long trade.
Okay, so you want to see buyers step in at key levels from the prior trading day. And what is your confirmation again that the trade would be starting to work for you, where you'd be comfortable starting to build a larger position?
For me to start building a larger position, I'd like to see it reclaim VWAP and then break out above the pre-market highs and hold above that level. Okay,
and when you're setting up that game plan in terms of taking out the pre-market highs, how do you define holding above that level?
I'd like to see, price pull back to that level and seeing strong buying on the tape, and then have those buyers start to step up. And when I can see price starting to bounce with increasing volume, and I'm correlating with that tape. That's how I use kind of the confirmation.
Okay, and is your confirmation, is it solely based on seeing buying at the level, or does it have to spend a certain amount of time? And are you looking at this differently in the first 15 minutes versus after, say, 10 a.m.?
It definitely. The longer that it spins, say we get a pullback to the pre-market highs and it just starts consolidating, I'm looking as a bullish sign that it's holding my level. And the time frame is extremely important because from 9:30 to 10, it's basically price discovery. And when it starts to bounce off that level after 10 to 10:30, I feel like the trend for the day is developing.
And do you want to continue to walk us through the trade from that day?
Yes. So here's just a chart of the SPY. It was gapping higher in the morning, hitting pre-market highs at 291, but then failed on the open at 291, and then continued to sell for the rest of the day, but really didn't affect JMIA. This is a daily chart, and you can see that it IPO'd at 1825. I list the open, high, low, close, and you can see each day that it closes pretty strong. On the first day, it closes 2% off the highs. Second day, it closed 56% off the highs, and then the third day, it closed 4% off the highs.
Okay, so on day two, it basically closed in the middle of the range, but you still had the inclination that you wanted to look for further upside. What was kind of the thought process there?
Yeah, coming into day three, after pulling back that much, what really kind of made me put together a long trade was we were still gapping higher. Seeing that price was gapping higher and then that it really held the pre-market after hours support is why I continued to put together a long trade. So this is a 15-minute chart, just highlighting the support and resistance levels. You can see first day ascending triangle, second day. It really formed the exact same pattern on the second day that I traded on the third day. It breaks and holds the opening range high. It consolidates for 30 minutes to 45 minutes, and then breaks out with volume confirmation. Then we have on the third day price gapping higher. It's pulling back to the after hours support, begins to find buyers, and as price reclaims VWAP, volume starts to increase. And if we go to a smaller time frame, you can see that we fail at 36 right on the open. It sells off down to 33 on really light volume, but as price starts to trade higher and it reclaims VWAP, you start to see that volume confirmation, and we get that breakout above the opening range high, and it pulls back, it retests, it holds 36 support, and then continues to trade higher on volume. And that was the first setup I was looking to make, was this breakout trade, and then around 12:30 to 1 o'clock, I really started to see that this is forming a very clean wedge pattern that I could see on multiple time frames. See, I'm looking at a 2-minute chart here, but when I switch to the 5 and the 10-minute, I'm seeing the exact same thing.
Okay, so this let's pause here for a second. There's a few interesting things you said. Number one, I want to go back to what you said. You talked about the pullback on light volume, and then when it started to curl back up, you saw heavy volume. Can you explain to the traders why that was important for you?
Yes. It's showing that, the selling pressure isn't as strong as the buying pressure. It's pulling back on light volume, And as you can see here, I should have highlighted it. It's like when we get this breakout above VWAP, you see that the buying pressure, the buy side volume starts to pick up. And when we get this pullback, there's very, very light volume. And as soon as we start, it's just showing that, the sellers aren't as strong as the buyers. And when we start to bounce, the same volume starts to pick up.
Okay, and so that's very important. And for intraday trading, when we're looking for stocks to trade to the upside that have been showing strength recently, we like to see the volume decrease as it's pulling in, and as it stabilizes and starts to turn back up. If we see a spike in volume, that means people are really still trying to participate to the upside, and that's going to make us even more aggressive as well, because we want to go where most people are going and riding that tide. The second thing that I thought was really interesting after you made that point, you then went on, you came in with this game plan. You talked about, you had your levels you wanted to look for, you wanted to look at it on the long side, but then something happened starting, it looks like after about 11 o'clock, and you were using the intraday price action as kind of a guide, I guess, to supplement this trade or start a new trade. And so why don't you talk about that process of coming in with a game plan based on the prior day's pre-market, and then how you're using more information you're gathering throughout the day to potentially make additional trades?
Yes, so, originally being a breakout trade, I'm going to be holding a core position as long as price holds above 36 support and continues to hold above VWAP. And, seeing that a wedge started to form, after 11:30 to 12:30, which is another setup that I really like to focus on, is this big dog consolidation. Just seeing this and having all of the parameters for this setup, holding above VWAP, holding above pre-market highs, the opening range high, having all these factors align just made me want to get even bigger within this trade. And, something that's very important with this as well, it's like I'm trading off a 1 minute chart, but I'm always looking at multiple time frames, making sure everything aligns. It's like if I'm seeing a wedge pattern on a 1 minute chart, I like to get that confirmation of seeing that wedge pattern on a 5 to 10 minute chart as well.
And the one thing that's interesting, the point that Aaron just made there, he's checking these multiple time frames, and even though he's using the lowest possible time frame to guide his trade management, as he goes up higher in time frame, he's going to be capturing more market participants. Somebody's looking at the 15 minute, someone's looking at the 30 minute, and if all of those things line up, that means there's that many more people potentially participating in the trade, which is extra fuel for the fire. And because he's a skilled, experienced intraday trader, he's able to go down to the lowest time frames, make more decisions, more compressed decisions. That's the skill you develop as a short-term intraday trader, and get more precise entries and build larger position. But at the same time, he's looking at these people who are making less decisions on the higher time frame, but are they likely to be coming along for the ride and helping push that ride along? Is that kind of the thought process there?
Yes, exactly.
Yeah. Okay, and so then you also highlighted there that there was volume confirmation on the break of the wedge as well. I wanted to ask you a question. How are you thinking about this in terms of risk? Initially when you put on the position, as you were building the position, risk to reward, stops and things of that nature, and also targets?
Yeah, so my original average price, if we just look at the trade here, I originally got into the position a little bit above 34. As I'm looking to risk against 36, I want to see price hold above 36, and I'm trying to put on positions. While I was in the wedge, I put on 2 tiers, and on the breakout, I'm looking for at least risking a point to make 5 points or more. I figured, if we do get this breakout with volume confirmation, that's really when I'm going to add my size into the trade, because now a lot of shorts are going to have to cover and I could just see this thing squeezing above, the second day's high. And if we get above that level, I think, it's just going to start to squeeze higher, pushing out a lot of short sellers, and that just equals a lot greater risk reward for me.
Okay, so initially you're getting in at 34, you said, and when it gets above VWAP, basically, your risk there is...
I was risking the low of day.
Okay, got it. So about a dollar and change there. And once you get your confirmation above 36 with consolidation, on those pieces, you're risking $1 again on into that consolidation?
Yes, I was giving a little bit of room, like say if it flushed down below 36 or VWAP, I'd give it around 50 cents. But as long as it continued to hold above there, I was going to stay long the position. And if price ever broke back below 36 on either strong volume or broke down out of the wedge, I had a hard stop right below 36.
Okay, and your target, as you said, was on the break to prior day's high, and did you sold some into prior day's high, I guess?
Yeah.
And then what was your thought process as it made new highs and then kind of stalled out and pulled back and did a retest of the prior day high?
So, we get the breakout of the wedge pattern. It's confirmed by volume. We break out. Let me see something. We break out above the previous day's high. It fails. It flushes above 40. And it fails, but it pulls back to 39, and you can see very clearly that the buying pressure was still very strong. And I originally was going to add on this pullback to 39, but I had only gotten a partial fill on the break above 40. So I ended up not adding, and you can see as it breaks back above 40 is where I immediately take off the size I originally wanted to. And as we're holding above and we're consolidating, I'm like, this trade's looking good. The buyers are holding price up. And then we just get this big, 2-point red candle. And, I ended up selling because it kind of looked like a change of character within the price action. And we broke back below 40. We broke back below the previous high, which then I exited my entire position.
What that big red bar where it looks like it might be starting a reversal, what time was that?
This was at 2 p.m.
Okay, so it's like well before the close. So it wasn't just people trying to get out at the close. Okay.
Yep.
Okay, and did you end up carrying any of this overnight, or was this just purely an intraday?
Purely intraday. I had a really good average price, but for the first, 3 days, it's been extremely strong. It started trading at 18.25, and now we're trading, in the mid 40s. So I ended up not carrying anything overnight.
It was getting a little frothy. The risk reward was not quite as good overnight.
Yeah, I just did not want that risk.
Okay, and so from a risk reward standpoint, on initial risk, what multiple, what did your reward end up being for the trade?
It ended up being at least a 5-to-1.
Which is great, right? From an intraday perspective to capture 5-to-1.
Exactly, and as long as you consistently have that kind of risk management of trading a 5-to-1, a 3-to-1, it's just the way you want to do short-term trading.
Okay, so I think there's a lot of good stuff in there. I don't. Look, Aaron's been trading 5+ years, as I mentioned at the top. He's very humble, but he is a 7-figure trader. There's not really much to critique here. He's looking at the right stock. He's looking at something with supply, demand, and balance. He's noticed that it's priced above its IPO range, which we know that it's hot. We know that it's closed, higher on day one. It's shown signs of strength on day two, even though it's closed in the middle of the range, and he sees it gapping up on day three. So stock selection, we know, is 80% of the battle, right? So you found the right stock, and so that was a huge part of it. And then he was, in terms of the risk management, I liked how you went in quarter position and you waited to actually see other people step in for it to hold higher. You had the levels you identified, I think were all the key levels that certainly the same levels I would look at. And then when it had the big red bar at 2 o'clock, you got into a defensive posture because that was a change in character. So overall, it seems like you did a great job identification, you did good risk management, and kind of pulled out, I don't know when you were reviewing it if you felt you pulled out as much as you could, but it seems like it was pretty close to pulling out as much as you could on the setup, what it had to offer.
Yes, I only had, when we had the big red candle right after 2 p.m., I only had about 15 to 20% of my position left.
Right. So one of the things I like to do is, when I'm evaluating intraday how well I did on a stock is, if it started at point A and the high was point B and I had maximum X number of shares, what I like to do is basically divide my maximum position size in half, and if from low to high, I made that. So in other words, if it went up $5, if you had 1,000 shares max, and you made $2,500, to me, above that you're doing well, below that you're underperforming. That's kind of, I don't know if we've ever discussed that before, Aaron, but that's kind of my Mendoza line for performance. And so if you were able to capture, that move with more than 50% average of the position, that's good performance. And it seems like you were well above that. And so really nice job on that. Any questions related to the trade, guys, on this? I'm assuming some people were watching that day. So, right. So look, Aaron is 5+ years, independent trader. He's basically incorporated some of the things that we do on the desk here that our top guys have done consistently. I know personally he used to send me dozens. I couldn't even go over all the playbook reviews he did, but he would send me them religiously, and he did them religiously, and he internalized his best setups, and now he trades them at 10 times the size or 20 times the size. And it was spending the time, putting in the work over a course of a long period of time is why he was able to grow to a 7-figure trader. It didn't magically just happen because he's the most talented person on the planet. He's a smart guy, and he does have talent, obviously, but it was the work that he put in over a period of several years that allowed him to grow. And we're really happy to work with people like this. That type of work ethic we love, and so we invite other people to work with the firm. These are exactly the types of people we'd love to work with. So Aaron, thanks for sharing today, and a really nice job on this trade.